Test 1 2. Test 1 2. Dennis.
Test 1 2. Test 1 2. Test 1 2.
All right.
Is it? You got it going on there. Oh, there you go. Test 1 2. Test 1 2. Test 1 2.
All right. We're good. Goes.
No
All
echo.
right. Well, I'm listening now, but
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Tuesday, January 31st edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Today's show, real quick, is brought to you by Chaikin Analytics with their groundbreaking stock research tools, including the proven Chaikin Power Gauge rating and stock discovery engine. Chaikin Analytics simplifies complex investment decisions, and it's all presented in an easy-to-understand platform. To learn more, visit chaikinanalytics.com/premarket. That's Chaikin, Chaikin, analytics.com/premarket. You can see it up on the screen right now. We have a chart of Under Armour. Of course, that is the disaster stock of the day. It's one of the many stocks we'll cover on today's show. Before we get to our guest, and that is Nick Shaheen. He's the author of Create Income with Option Spreads on Marketify, and then we're also going to go a little bit long today. I have a guest at 9 o'clock. That's Nikhil Dhingra. He's the co-founder and CEO of Tradigon. They are a fintech firm that kind of invented behavioral calculus and how that relates to the market. So we're going to talk to Nick at 8:35, Nikhil at 9 o'clock. Joel, how are we doing in the S&Ps this morning?
First I want to ask you here, Spencer. I'm looking at the Under Armour here on the Chaikin Analytics, and says very bearish. Did they did they change it like during the day, at night? Because that was one heck of a call going into it, and as you can see, Under Armour's getting killed. But real quickly, let's look at the S&P 500 futures. We'll see if the correction's over. Lost altitude yesterday, trading in the red today, down 5 1/4. The number on the downside, beside your pre-market low, is 68 even. Is Monday's low at 63 1/4. Moving over to the crude market, just 52 to 54 and change. That's been the range. A little consolidation here. We'll look at it during the daily chart. Oil has not been in the news as much here. You can see 52 to 54. And moving into the gold market, over that psychological $1,200 level, back at 1206.50, trading up for the third day in a row. Dennis, how you doing on this Tuesday morning?
I'm doing better than the market is.
Yeah, well,
Retailers, this is ugly. This Under Armour, this is ugly. Ugly, ugly, ugly. Cold and ugly.
All right. Spencer, you want to go into that report?
Sure.
And we will dissect the heck.
Well, Spencer, how was your trip to New York?
It was fine. Thank you for asking. I landed at 7:30, and I took off again to come back at 6:30. So I was there for about 11 hours, and just enough time to get some business done. But I'm back now, and I am looking at Under Armour Q4 EPS 23 cents versus 25 cents. Sales 1.3 versus 1.41 billion. As far as guidance goes, fiscal year 17 sales at nearly 5.4 billion. The estimate was 4.93. I think what they're hitting it on is the fact that Under Armour is an earnings machine, and they never ever miss. They don't even go in line. They beat every quarter, and not this quarter. They missed. So I think that's what they're crushing it on.
They beat last quarter, and they killed the stock. They don't put this in perspective. Now when you miss, now we really kill you. That's how we do with Under Armour. So you beat, we beat you up. If you miss, we really beat you up. Under Armour, UA, whichever one you want to look at. We'll look at UA first. UA closed at 25.09, is trading at 19.73. Yes, it's taking out 6 handles here this morning. 25% Under Armour trading down here. Actually, only 21% now. The UAA, which is its other symbols, trading down 27% here this morning. Actually, no, sorry, 22%. So they're both kind of in line here now. Bouncing around a lot this morning, both these stocks trading massive amounts of shares. Like UA has already traded 980,000. UAA has traded 1.8 million shares already here. It's trading down at $22 in the pre-market. Joel, which one do you want to go to, and what do you think of the technicals on this?
Oh, man, what can you say? First of all, we'll go to the UA, and that is a new all-time low by a considerable margin here. The former all-time low, that was back a few months at IPO at 23.51. We're trading.
When they split it up.
Yeah, wow. Unbelievable. Kind of looks like it's on the rebound now here. Looks like you may have missed the low of the day if you didn't buy under $19. Kind of trickling up here. Resistance, I mean, daily chart or the 15-minute chart a little bit here at 2070. Going to UAA here.
Yeah, because this one's the one that has the historical data. So, and this was, if we go back, we're back to 2014 levels here in UAA.
UAA pre-market low of 20.48. Man, this thing has not been down here in quite some time. Let's take a look. Yeah, you're right, Dennis. Back in 2014, 25.33. I mean, if I was short, I would buy it. I mean, if you're trying it along, keep a tight leash on it, but seems to be on the comeback trail. To me,
if you were short, you'd buy it just because you'd be booking the profits. But
exactly.
Is that the thing to do? I mean, if you've been short this thing the whole time, let's say you've been short since 40, why cover it today? That's my question to you. Just asking.
Because if I was short since 40, then I would move myself.
You would have covered. I would have covered 35.
39.
The scalper blood. What do you think here, though? I mean, the company still makes money here. Is this, this is trading like it's going out of business? Is this what is happening here? I mean, Under Armour, this stuff can get sold on Amazon. Isn't it sold on Amazon?
Yes. What isn't sold on Amazon, Dennis?
Well, that's what I'm saying. So why are we hitting UA so hard? It's not like they got these department stores. I guess they have a few retail stores, but most of their stuff's just sold in other places, is it not? Is there a lot of Under Armour stores? Do they have a lot of physical stores?
They're opening more constantly. There's a new one coming here.
They should stop.
Yeah, you think they're gonna open that puppy?
Yes, they'll open the store.
Okay.
Where is there one opening, Spencer? Where'd you say?
Right here, right where we are. Really? Right across the street, or somewhere around here.
Yeah, kitty corner from here.
I mean, I don't know. The stock is 50. You're looking at a stock that was $52 back, a year and a half ago. Now it's $21.90 if we're looking at the UAA. So you're down 60% from the highs here. It's ugly, and this isn't just ugly for UA this morning. I'm looking at my filters here and looking at the stocks trading down, and it is littered with retail stocks here this morning. So if you look, obviously sympathy plays. You think about Nike trading down 2% here in the pre-market. Lululemon trading down 1.5% in the pre-market. And then, you look at the department stores, and when you think it can't get worse, it can. Macy's is trading down another 1.5% in the pre-market. Nordstrom's trading down and offered down about 1% in the pre-market. Kohl's KSS is not traded this morning, but it is offered down at $39.35, and that would put it down about 1% in the pre-market as well. All the other ones are in there too. Burlington Coat Factory, TJ Maxx, you pick your poison. They're all trading down in the pre-market here. So it looks like it's going to be a little bit of a retail massacre day, and it has not been a good, retail massacre, a couple of years. So now you tack on more losses here, and I think anybody who's invested in this sector must be scratching their heads.
Yeah, maybe. We'll wait. We still have most of the retail earnings coming out, a little bit later in the quarter, but we'll have to dig up Ryan Craver here, see what Lamar Group, see what he thinks of the carnage here in the retail sector.
Jumping over here to other stocks that reported, you know what? This earnings season has been a tough earnings season. I'm just trying to think, just going from my goldfish memory here. There has been a lot of stocks that have reported pretty good reports, and they hit the stocks on them. And the ones that report bad reports, like Under Armour, they really hit them. But even look at MasterCard here this morning. So, and we were talking just before the show started, MasterCard was trading up at 111. I was like, and you're like, well, MasterCard's trading up. And I'm like, yeah, but for how long? Because this market seems to find a reason to sell these stocks on earnings. MA, give us the numbers here for MasterCard. It was trading up initial report. Now it's trading in the red.
Q4 adjusted, Q4 adjusted EPS 86 cents versus 85 cents. Sales 2.8 versus 2.79 billion. So a slight beat on both.
And it was trading up at 111, but here we are 10, 15 minutes after the report. No, we're going to sell this one too. And it's trading down now 2% in the pre-market. What has rallied? What stocks have rallied off of their earnings here? That's what I'm trying to figure out. I feel like 90% of the stocks reported earnings that went down.
I could give you one that I bought puts in, and I shouldn't. And I shouldn't have done the weeklies again. I bit myself here. on this one, but Love did rally to a new all-time high, but I gave some back yesterday. But let's look at the MasterCard. The initial spike was to 112. So if you missed that, then you were keeping an eye on the all-time high, which was 111, and they gave you that shot. The all-time high was 111.07, and just as on this bracket here, it traded up to 110.95. Now we're down at 106.51. MasterCard here. Some problems. Now you're getting into a vacuum area. Dennis, what do you think about sticking a bid out there at 105? 104.86 was your January 4th low. 104.11, that was your low on January 3rd.
I mean, you could get a bounce on any of these levels here, but really, I don't see anything really jump out too much to me. You can pick those points, but, then there's other points at 104. Who knows? This thing's in free fall right now. And you taught me, Joel, don't just try to throw it out there when it's going down. Wait till it starts to turn and start going higher and, not fighting the momentum here. Because momentum is straight down this MasterCard. Since we started speaking about it a minute ago, it just fell $1.50. So, this is something I don't want to just put, this market, it's kind of turned ugly here ever since the weekend. It was an ugly day yesterday. Now it's ugly here again. Trump's firing people now. I mean, there's a lot of uncertainty here, and a lot of people sitting on a lot of profits. And if you're a big money manager and you're kind of scared of what Trump might do next, aren't you booking some profits?
Dow 20,000. Actually, Bob Wire made a good point. He was in the chat.
Are we still above Dow 20,000?
No.
Below it now?
No, but they don't talk about it. 19,971. We'll get a little haircut off that. It was a big deal when it was above it. Now we're below it, and no one's talking about it. Just going back to whole numbers, Dennis, like the big number. Oh, Dow 20,000. Do you know where the S&Ps got to on the high of the move here?
Where?
During a Globex session, 950.
Those big psychological whole numbers work. We talk about it all the time. You know what? I've made a lot of money over the years just trading out those psychological numbers. I know Ace talks about them too, and it seems silly, but the reasons they work, first psychological. Second thing is it's where there's a lot of strikes, and not so much indexes because there's strikes everywhere. But when you're talking, the stocks and MasterCard 105, that's where you're going to have some open interest probably at those big numbers, Apple 120s, and that's turning points, because when you have huge open interest there, it can act like a magnet first of all, but it can also act like a resistance, because if you got people who got a whole pile of calls above 120, well, that's going to be resistive, because every time the stock gets above there, they can sell the stock against their calls, which puts natural downward pressure on the stock. So that's the one thing to consider, the big whole numbers. I've used those over the years and it works. A lot of times we turn at big whole numbers.
Speaking of not knowing or the unpredictable nature of this administration and not knowing what to make of what, I just saw this coming across my Twitter timeline from Meg Terrell. Trump is meeting with a bunch of pharma companies today, and RBC in their note actually said they don't know what to make of the meeting, and they don't know whether it'll be good or bad. Essentially,
nobody knows, because he's so unpredictable. He'll just tweet out after the meeting, "I don't like any of these drug companies. I'm putting caps on all." I mean, you never know what he's gonna say.
But when's the last time?
Or maybe he's gonna say, "No, I had a good meeting with Merck and Lilly or whoever he's meeting with." It's unpredictable. I don't know. Like, this is, and you look at the markets here, like, I mean, if you wanted an excuse to short, you've got the excuses all over the place. If you want an excuse to take some profits, you've got an excuse all over the place. And, and we've had excuses before, but I feel like there's even more excuses here now. So it's hard to come in here and buy stocks with that much uncertainty at the top.
My point was, when's the last time you've seen a firm come out and say, and the exact phrasing here is, consensus does not know what to make of this?
Yeah, your analyst firm. They don't even have an opinion. We're like, we don't know what Trump is going to say in this meeting. It's scary. I mean, it's scary as a money manager there, and I think that's why you're starting. You can see continued weakness here today. And we talked about gold yesterday not getting a rally in the pre-market show. Well, it's starting to get a lift here now. There's starting to be some uncertainty, and people are saying, you know what? I want to sell some stocks. I want to buy some, more conservative stuff here, and gold's starting to show some life here. So, not surprising you get this much uncertainty. But, overall here, the market is still very near all-time highs. Individual stocks, there's a ton of them still near all-time highs as well. So, lots of profits to be taken here.
If you're looking at the gold, if you get up anywhere near 1220, 4 highs in that area going back over the last couple of weeks for you gold bugs.
Well, just looking here at all the other stocks that are trading this morning, I mean, everything. I'm looking at the earnings reports here. They're all trading down. Pfizer's trading down on its report here. We've got ExxonMobil. Did ExxonMobil numbers come out yet?
Yeah, disaster.
Yeah, XOM came out, their Q4 EPS of 41 cents. Estimate was 70, so big miss. Revenue 61.01 versus 62.28, so misses on both.
But they're not hitting it very hard. How low did it get?
Did get to 83.33 on
So
that
it's come
dip.
back. So, and you know what we always say is, look at oil. Oil's starting to come up, and it's starting to actually trade higher. The USO is anyways here this morning. So, that's more influential. They already hit it a little bit yesterday on the Chevron earnings here, so on Friday. So, I don't know. Exxon's come back off those lows. So here's one that isn't getting beat up on a bad report.
Yeah, I wonder if that's non-comparable. Trading down 9 cents here. ExxonMobil went off the board yesterday at 84, 86. Looking at this chart here, man, Dennis, you did a good job selling this one out of your portfolio, that's for sure. Cluster of lows here around the $83 level. 82.76 was one low, up to 83.27. But the way we bounced here, I don't know. Don't know if we're going to get back down there again. Yesterday's low is something that you can keep on. That was in the lower 84 handle at 84.18.
Then you've got UPS trading down 5 points in the pre-market here. So it reported right at 8 o'clock, closed at 117.03. It's down the 111 handle here now. Spencer, give us the numbers on UPS.
$1.63 versus $1.69. Sales of 16.93 versus $17 billion. Guidance, they see fiscal year 17 EPS at $5.80 to $6.10. That's below the $6.16 estimate.
Yes. Triple whammy knocking this thing down 4 points here in the pre-market. So we're taking out right now the low of the move, which was 113.30 back on the 12th. Now you start to look at the area where we ran from 108 up to 111 here. We're getting into that little area where there's not as many, lows here. Joel, technicals, what do you see?
Wow, this thing is showing no sign of lining up here. 111.30 is where we're currently trading. Big run up here from, you had a bunch of monthly lows at 106 to 107 area. That's still $6 away. So maybe use some half and whole numbers along the way to get to that support. Did see we're 112. I can't find anything in here, Dennis. I guess, all right, here we go. I found a low for you if you guys want to lean on something. 110.24, which is, near a psychological level. 110 even. 110.24, that was your low on November 9th.
Other stocks that reported, Sprint was trading higher on its report. It's now trading in the red as well. So we're starting to see a pattern, at least here for today. Even if you beat on earnings, they hit you. S here, trading down about 10 cents in the pre-market. Give us the numbers on Sprint, Spencer.
Q3 EPS, a 12-cent loss. Adjusted EBITDA, $2.45 billion. Sales, $8.55 billion versus $8.69, so a miss on the sales.
And that's why the stock is now trading the red. But it did get a lift, Joel. Where did we get up to? Because when I first came in, I saw Sprint trading up about 1%.
Did get a little lift off the initial number. Let's take a look. You got up to almost 9:30 here. Actually, last night or after out. No, that was
early
yesterday.
Pre-market.
Yeah, early pre-market. But just recently, you traded as high as 9.29. Now down at the $9 level. I see a couple lows at 9, so that's important for that to hold. If you fall under 9, maybe look at the 8.80 and the 8.60 levels.
Also reporting, we had Xerox, we've had Lilly, LLY. Lilly's trading, it traded 100 shares higher. Well, how did Lilly do? Give us the Lilly numbers.
Q4 EPS 95 cents versus 98. Slight miss. Sales 5.76 billion versus 5.55. So a beat. They also reaffirmed their fiscal year 17 adjusted EPS outlook. And that's in line.
It's just hanging out. I mean, the stock has had a little bit of a run here since November from 65 to 75 here, kind of hanging on a cliff if you look at the technicals here. But we know fundamentals, we'll have to see what, they start to do. It's only trade 100 shares here. The best bid is way down to 73.60, which is down $1.50 from where it's at right now. Offered at 75.25, so I wouldn't be that surprised this thing started to go in the red here too, just from that bid offer. But technical thoughts here, Eli Lilly.
I like 75.5 area. 518 was a high from yesterday, but that's backed up by three other highs, with 75.5 being the middle of them. So could see some size in that area. This one, look out below $74 here. 74.17 and 27 are a couple lows you have, but that just seems to, with the rally that it's had, holding a whole number like that, I think you see some downside through 74.
Aetna AET reported it's trading up $1. So you have a few stocks that are trading higher, I guess. Valero, which has been a monster here. And let's talk about VLO. I had this one in my invest portfolio too. I sold it here around $69. I sold it about a month ago. I just felt the Trump run was a little bit overdone. It had run obviously from about the 55 area all the way up to 70. And, I bought it down in the 50s when everybody hated it. That's how I do in my invest portfolio. And it seems to have worked for me for a lot of years. And I keep playing. I'm a contrarian investor, but a momentum trader, if that makes any sense. 4.18% dividend it's got still up here right now. VLO, how'd they do, Spencer, on their earnings report?
Q4 EPS 81 cents versus 77, so a beat by 4 cents. Sales 20.7 billion versus 17.42, so a nice beat on the sales.
Stock down $1.23 pre-market. Joel, talk to us about these technicals.
You got a bunch of highs here right at the 68.40 area. So if you can mount a rally, keep an eye on that quad top, 68.40-ish. Coming back on the downside, very important here to hold the pair of lows from the last two sessions. 66.71, that was your low on Friday. 66.61, that was your low on Monday's session. So kind of range bound. Let's see which way it decides to go.
Also reporting earnings, we got the HOG, Harley-Davidson, HOG, and it's trading down 2 points in the pre-market. And this thing's had an ugly couple of days ahead of the report. Boom, it was at 60, took it out, 2 point loss, another dollar loss, another dollar loss. Now we got a 2 point loss here. Now we start to get into an area where it starts to open up a little bit. I mean, if you start getting under, 54 is where I would say, really opens up. But that's another 2 points down from here. But HOG can move a lot on its earnings report. I've seen HOG move over 10% before on its earnings report. So it's hard to just jump in and be a 3% buy or a pullback buyer in HOG. Spencer, give us the numbers on HOG.
Here's a company that I don't get how is still in business. Q4 EPS 27 cents versus 31, so missed. Sales of 1.11 billion versus 972.5 million. So the beat on the sales number as far as fiscal year 17 motorcycle shipments, they see that being flat to down modestly year over year. They see Q1 shipments at 66,000 to 71,000 units.
Nothing's that exciting in that report for me, and we've had a pretty good run up here. 2016 was not a bad year for HOG. Started the year around $40, finished the year around $60, so it's a nice 50% gainer here. But if you look overall, back, if we go out to the monthlies here, and sometimes it's good to get a longer term perspective. Back in 2014, we were $73, $74. Then we had a 2-year sell-off. We had a 1-year reprieve. But if you think about, if it's whole wave theory or whatever you want to talk about. I don't know. I think there's still an overall, kind of a concerning downtrend maybe here from the last 3 or 4 years. So, and now you're seeing disappointing earnings reports. Makes me not want to jump out and buy it right away.
No, not at all. And you have a monthly low from November at 55.48. You could see that as like the highest, third highest monthly low. After that, it really looks ugly basis in monthly charts. We're trading right there right now at 55.65. So there's a level to keep an eye on in HOG.
Let's move away from the earnings for a little bit because we had a ton of reports. If there's any other company that we didn't cover, let us know. Like Coach reported, we've had NUE report, we had those are the main ones. We've had a ton of other ones too. We're going to get Apple tonight, which we will preview here in a minute. But I want to jump over to DryShips. We got to talk about it. DRYS getting a short squeeze here this morning. I mean, the stock reverse splits and falls 30%, 30%, 30%. I guess you got to get a day that it goes up 30%, right, Joel? I mean, DryShips either goes down 30% or it usually goes down 30% for 4 days in a row. Then it goes up 30%. Well, we're getting the short squeeze here today. Stock closed $2.46. I saw some headline that somebody bought some stock or something in it at 308, and that drove it up in the after hours last night all the way up to 380 before now it's trading at 339. Crazy amount of volume premium last night. It's almost traded 1 million shares here this morning. I mean, this thing is just ridiculous trading. How do you value this company anymore? I've been saying for a while, I think the value is zero. They just keep reverse splitting and somehow keep the stock alive. But 36% it's trading up here this morning. I don't know how you do technicals on this, Joel. Can you do technicals on this?
You did. Well, can you short it? Can you borrow it? Have you tried to borrow it?
You can. Yeah, you can.
Okay.
I don't know. Are you going to short into this though? Like we're,
I don't.
It's $3, $2.50. Then you go to $5-6, and it's just where it was like 2 days ago.
Let's see here. They might have broke the string. Oh no! What happened here? Remember, I was talking. Oh, it broke the string yesterday of like 24 or 25 down days in a row. Closed it. It was. I hear that. I don't even.
No, it wasn't 24
Okay.
down.
Okay.
How many down days in a row?
Okay. All right. 30.
Add them up.
All right. Count them as I say them. Okay. It closed at 34 on December 23rd. All right. Oh, let me get the daily up here so we can
get it up there. Let's point them out on the chart. There's no way it's down 24 days in a row.
Wait, hold on.
It was down a lot of days in a row though. Like it seemed like clockwork. Every day you come in, DryShips falls 30%.
You see, you can't even do it on the daily because of all the
reverse splits. Yeah. So you can't even see it because.
All right, there we go.
There it is. Ridiculous looking chart.
There we go. You can count them up. I guess you had, but those green represent if it closed higher than the open. But let me count here. December.
Oh my God, that looks awesome.
December 21st, it closed at 38.96. So there was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Then you had 14, then an update of 24 cents. Okay, and then you had
a resumption.
And then you had 2 more down days, and then you had some consolidation in 808. It closed there twice, and then it went down 1, 2, 3, 4, 5 more days. So basically, 2 or 3 out of 26 or 27. I'll just give you your pre-market high of 380. Looking on the daily charts, 403. That's your 3-day high. That's something you may want to keep an eye on.
This thing could go anywhere. So it's hard to trade it. If you are trading them this morning, though, there is sympathy moves with these. A lot of these little shippers that are almost out of business there. So you look like an SINO that's trading up 15% with the dry ship. What was the news on DRYS? First of all, I did see a headline go by there last night, Spencer, in the Pro. What was this news that this person bought some stock or something? One person buys some stock and everybody jumps to start buying stock?
It was 22. It was 22.5 million shares to Kalani Investments with a limited, with a fixed amount requested of about $70 million or $3.08 a share.
And
somebody bought some stock. Wait, and we're gonna rally this thing for. Which is Diana Container Ships. It's trading up 13% in the pre-market. ESEA, which is Euro Seas, is trading up 9% in the pre-market. So there's a few of these stocks here, that do have sympathy moves with these. So if you are trading any of those, watch those ones too, because when DryShips rallies 50%, it usually lifts. What it is? What's that saying? A tide lifts all ships or something?
Rising tide lifts all ships.
A rising tide lifts all ships, and the rising tide is DryShips here today.
All right, let's look at for ASAF, Teva. And didn't we have some bad news on Teva here this morning?
Isn't there always bad news on Teva?
I got that they intend to appeal a patent ruling involving Copixone, which is one of their drugs, because that.
I think last night wasn't there something that patent ruling was after the bell last night.
Yep, and exactly. So that was after the bell yesterday. They lost the ruling, and they're going to appeal.
Okay, so they're going to appeal this morning. Maybe that's why you're getting a little reprieve here in the pre-market. I mean, obviously they're going to appeal. But stock, this is another one here, generic drug. You think, how bad can it get? But I mean, the trend is not your friend here. It's even got a 3.6% dividend here, which starts to look attractive too, and starts to get me interested as well when you start getting those dividends up there. But $70 stock, a year ago now, it's a $31 stock here. Classic pharmaceutical stock, more generics obviously, but this stock has not had a good year.
Yeah, I hate to say, but the former low of the move, 32.11, that was buffeted by a 32.34 low. That now is resistance. So if you're looking for this to get in any kind of rally, you got to see it hold 32 here, at least for the first or second bracket. Pre-market low, I don't know if we're going to see that one. Someone really got excited when they knocked it down to 29.89. So maybe if you're looking to pick it up on the cheap, maybe psychological, $30 level. This is a not quite an all-time low for the issue. You haven't seen $30 in this stock since it traded 30.33 in November of 2006. So 30, possible support level in Teva Pharmaceuticals.
Oh, pre-market imbalances here, or the opening imbalances, looking at Bank America 97,000 sell. The financials are underwater here again, so you're seeing a little bit of pressure there. Although JP Morgan back in the trend has got 60,000 to buy so early, that's pretty small here. Alibaba 78,000 to sell. General Electric 66,000 to buy. Home Depot 46,000 to buy. There's a retailer that looks like it could go higher. JWN 29,000 to sell. Not surprising. We know it's a mess there in Under Armour. If you want the UA and the UAA sell imbalances, UAA is only 55,000 shares right now. That is going to grow.
All right, 8:31 here. We got a few minutes before we bring on Nick Shaheen, the author of Create Income with Option Spreads. We'll see what he's looking at. You want to talk a little Apple here ahead of earnings, Dennis?
Yeah, going to report tonight. Let's talk about it.
All right.
I mean, the stock has been holding up very well. Even yesterday, with the market sell-off, they did not want to sell off. And it's traded down a little bit here this morning, but everybody's a little bit nervous to be short going into Apple's report. I mean, sentiment has turned a little bit towards this, but again, you always say, and I say it too, it's a little bit of lofty expectations because the stock has run up 10% here in the last month and a half.
And even more so since Mr. Buffett got interested in and around the $90 level. Hit 122.44 a few days ago, so probably have a little bit of position squaring ahead of it. Just such a big run going into it. I think they're really going to have to blow it away. I think the one key for this, it was a few days ago, and I remember someone cut their estimates on iPhones, and it just hung out that day and ended unch, and then you could see where the rally.
It's had a couple downgrades too over the last week and a half, and it opens down, and then by the end of the day, it's trading higher again. Like somebody is a buyer of Apple. It seems like every time it pulls back a buck, it just finds more buyers.
If it really goes into rally mode today, keep an eye on the double top from Thursday and Friday, 22.35 and 22.44. Those represents the high of the move. Yesterday's low way down at 120.66.
Do you have the option, Shane? We could go look at the straddle if you want here. I could bring it up too on my platform,
I can
but
do it here. Let's
bring them up here. Let's just look at the 120 here. So we'll look at the 120 straddle there just for this week here. We'll look at the February 3rd.
What do you
think?
You got three. What do you think before I pull it?
Well, I've already looked at the one side, so I shouldn't say what I think. So maybe we should ask the chat what they think it's trading at, because I'm already looking at it, so it's not fair for me to say.
All right, this week.
What do you think? What do you think it is?
$10?
Have you looked? No.
Try
again.
The 120, it's cheaper. It's cheap.
Way cheaper. $10 a big move for Apple.
Yeah.
I got $4.50 right now.
Huh. Well,
so that's the expectations there. Expecting it to move just under $5 on the earnings report there. So they're usually pretty right. I mean, those straddle raters usually got to figure it out pretty well. So we'll have to see if they get it right here again. But straddle raters are basically saying this is going to move under $5 on the earnings report.
Huh. Wow. That's not much at all here. Apple going to report looks good. High expectations. We'll see if they can beat those. Beat the street. VRX, Bob Wire mentioned at a 7-year low. Haven't heard much from Ackman lately here. This stock just,
Is this a zero? Like, I said it back in the day when it was like $40. I'm like, this is like $100 stock or a zero. And now it's at 13. I almost feel like, is this a zero? Like, they have laden with so much debt there. You wonder, maybe they've sold some stuff off. They're trying to get cash. They're trying to figure it out. But there's just so much debt here. I mean, I don't know.
one number and one number only to look at VRX, and that is 13 even. That was the low on December 15th. That was the low of the move. Now, Ackman sold a bunch of stock at the end of last year. I wonder if he bought it back. All right. 8:34. We're going to take a quick break here on the Smooth Running Show, and we're going to bring in Nick Shaheen. He's the author of Create Income with Option Spreads. We'll be right back with Nick.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Chaikin Analytics. I'm your co-host, Joel Alcon, along with Dennis Dick and Spencer Israel. We have Nick Shaheen on the line. He's the author of Create Income with Option Spread. Nick, did you enjoy the one-day correction yesterday?
Yeah, yes, I did. It was funny to see red. I guess red happens every once in a while. It's not funny for those who are long. But I knew it was going to happen. On Saturday, I sent out a note to members saying expect a little tizzy on Monday because of what happened on Friday night. I always said that, the market's already used to seeing what they've already seen as far as scary headlines. So they need and I'm quoting here, a new headline. And this was, even though Trump already told us he was going to do this, but maybe people didn't believe him, and now he's following up on his good and bad stuff. So, well, not bad, perceived bad. I'm not one to judge. So, yeah, the Friday events of, the ban on travel, etc., I knew would cause the tizzy on Monday, but I think it was somewhat orderly, except in the small caps was down 2% at one point, I think. You guys mentioned Apple held up well, so that's something to note. But that's based on hopium for an event that's going to go away soon, so we shall see the outcome of that one. So Apple will have its tizzy over the earnings. If the earnings come out okay, and more importantly, not the actual numbers, but the perception by traders, then it may not have that tizzy that the markets had yesterday, and higher prices may come. But it can't shake that 118-ish level for some reason. That's still on my radar for Apple. But if I wanted to trade Apple with both hands, I would wait until after the event. Before the event, because it's binary, I would play it with lottery money, meaning I would use an amount that won't break my heart or the piggy bank.
Nick, let's talk the FANG, because you always have your nice FANG chart there where you put the Facebook, Amazon, Netflix, and Google all together. And, I look at a stock like Amazon here, and yesterday morning they murdered this thing down from 832 all the way down to 816. By the end of the day, it was back at 830. I mean, this, money just flew right back into this FANG trade here again. Facebook was pretty much the same story, straight down. By the end of the day, had recouped over half of the losses from the day there. So, there is some people putting some money to work here on pullback still. You can see that clearly in FANG trading yesterday here. What are your thoughts on this market, and FANG going forward?
I agree. Amazon was a standout yesterday. I said I used it as a gauge. Okay, markets that are scared don't rush into stocks that are perceived risky. And we saw a few risky stocks catch a bid. Amazon bounced. I think it was like $15, $20 off the lows. You can see by the candle I'm posting right now, so it left a long tail. And also, I think Twitter was green and GoPro was up. So, and junk was up, and bonds were down. So scared markets usually run into bonds out of junk. And by junk, I mean JNK, so represents junky bonds. And That wasn't happening, so markets were not terrified. They were just trading the headline. Today, a little red. I was hoping for a little green at the open, but it was a possibility that we ran out of time yesterday. The market was trying to get to 75. They got to 75, I think, but they weren't trying to get to the 75, 79 area where I expected some sellers, but it happened overnight. So the sellers came in. But still, an orderly open this morning, so we shall see how this plays out. I think the earnings of mega caps will, stating the obvious, will determine how the bulk of the market trades for the week. But so far, the bias in the open interest is still not panicking, meaning whatever I saw at the end of last week is still in play here. A little more downside on Google pressure, not downside like sell-off, right? But there was upside pressure and that went away. So the hopium in Google is now less. Not to say that sell type of a deal. But if the markets fall, obviously they're going to sell it too.
Spinner wants to know about your baby Priceline there. Obviously, Priceline had a wild ride yesterday, too, getting all the way down at the lows around 1572 or 1571. And then it rallied the entire thing back in the afternoon up to 1602. Obviously, money just flying again, buying the dip in this one yesterday. That couldn't even dip for more than 3 hours. Man, that's like your honey badger stock.
That's another reason to say, okay, we're not panicking, because Priceline is also a momentum stock and it's perceived as high risk and moves fast. And if markets were selling in panic, Priceline would not catch a bid. So good point mentioning Priceline. I was writing it with debit call spreads and they doubled, and I got out because they were all in the money. Yes, and I should have kept them on, but it was a lottery ticket for earnings and it paid early. It wasn't a big position, but I had shared it and I said, the right thing to do is to get out. And if you want to stay long, you can re-engage with house money. I did not re-engage for Priceline. It just fell off my map. I've been pretty busy lately, but technically it's knocking on a roof with higher lows. So it's pretty. It met my target, so I did get out on that. But technically looking good. And if it has an event coming, and it does, then it should do well. Now, the other thing about Priceline is that it should have been down on a travel problem day, right? Airlines were down and the headline was related to travel, and it wasn't. So markets are handling the headline, the tizzy from over the weekend events, pretty well, in my opinion.
Real quick here, just strategy for the S&Ps. I did get your note over the weekend. I mean, do you try and wake up at 4 a.m. and hit some spider bids, or do you just use that for your strategy?
I don't trade off hours just because it doesn't suit my personality, but I do track it, and I do have friends that do. And I see, as soon as I heard my phone ping last night, I knew that something was up with the dips overnight. So I know they were trading. So the price action so far is just telling me somebody trading the headlines and not panicking for a long-term commitment. So yes, we are high up, but I think it's too soon to either give Trump more credit, meaning spike to all-time highs right away, or take away a lot of the credit we already gave him. So we're going to, which equals meander probably, unless we get another headline. We have Brexit meetings starting, but that event won't happen until March. And even when they do offer Article 50, then that's like until 2019 or something. I'm not sure how it unfolds, how quickly, but we've seen that headline and we'll probably handle it okay. We have Yellen coming up this week. Everybody expects the Fed to not do much different than they already told us until they see some results from Trump strategies. So we should have a status quo without a new headline for a while. Now, today's headline is that Trump is picking a fight with Germany over currency issues. So the dollar is falling a little bit. But other than that, I don't see many problems in the market that are alarming. So I stay the course. So if your thesis is more upside than downside, then you should stay upside bias, but stay nimble. So if you have a lot of money tied into one stock, you can protect it by buying a few puts. I wouldn't protect using the VIX because personally I haven't been able to make the VIX work for me. And I would rather just protect whatever position I have directly. So if I own Apple, I buy Apple puts. And how do I buy Apple puts for free? I sell covered calls against them. If you don't know what that is, don't do it without learning. But there are ways to protect yourself for free for a period of time.
Nick, DC1 wants your thoughts on GOLD. Feels like seems like it's stalling at 84.08. I know you're a little bit bullish gold at the end of last week here. Take a look at this chart for us, GOLD.
Okay, so I did go long gold via the GLD, and that's my second or third load up. So if I'm long gold, I'm assuming that GOLD is a gold company, so gold related, and technically it needs to get to. Let's see. No, it's not pulling up for me. I'm sorry. Hold on.
GOLD ran Gold Resources is what I got.
Right.
Yeah.
Right. Hold on. Let me then pull it up. It's defaulting to gold. Oh, there we go. It's almost identical anyway. So 84, 85, 86-ish. If it can get there, then it'll be technically inviting to spike up to the high of the range. And let me post a chart for you there. So actually, let me mark it up before we go there. If you're bullish gold, then this should do okay. I'm going to assume that that's what they do and related to gold prices. And I am long gold. I did it via credit put spread, and you could be aggressive and do it via credit put spread and debit call spread at the same time. So here's GOLD. Sorry about that. And it has that potential, but I can't guarantee you it gets there. So you have to watch the price action. You have to see that it doesn't lose this level because it's an important pivot level starting 2016 February or so, and it used it as support several times, then fell through it, and now here back at it. So it needs to establish the fact that it's going to be ongoing support in order to fill in this technical perspective if it happens.
All right, one more from the chat from Frankie23. CCJ Cameco Corp. I think I don't know if this one was one of the uranium ones that we were talking about. I'm not sure. But, boy, oh, boy, this has found a seller here at $13. Last three sessions, right above there, 1305, 1306, 1296. That looks like the key to any upside in CCJ, Nick. Any comments on that?
Well, I don't know the company, but technically it looks like it's trying to shrug off a downside trend. So I don't know where it's trading this morning. A caveat there. I've been caught with that one before. 13-ish is the battle zone. If you see, it's some sort of a plateau level from September of last year. And it looks like it was an overshoot downside, and somebody decided that was the wrong thing to do. And they're trying to shrug off a downside trend. Now, the red-blue is just a regression line. So they have work ahead of them, but they also have potential. So let's say if they get to 13.5, that's very constructive technically. And, it's not crazy to expect 16. Technically speaking, I don't know anything about their fundamentals.
Nick, let's talk financials, and the financials have held up pretty well. I mean, over the last couple of days here, we had a pretty good sell-off here yesterday. They did sell off, but again, they bounced back as well. But you put it in perspective, like it looked like a Morgan Stanley. We got 2 months of consolidation here. This is perfect consolidation, Morgan Stanley. Between 42 and 44, right in the middle of it at 43. I mean, do you keep playing this range, because this is a perfect channel here from 42 to 44. You just keep buying. Like it's worked 1, 2, 3. I don't know. It's worked like 7, 8 times buying 42 and selling 44, or selling short 44 and buying 42. Do you just keep playing that until it doesn't work?
Yeah, well, you know about that, right? You keep playing there until it breaks away from the tightness in one way or another. So here is, I threw in the XLF. Morgan Stanley looks about the same way. It looks like a goose's neck up there. So it is. The idea here is fundamental. Okay, so they're supposed to make a lot more money now, or because of regulation and rates, etc. And all this stuff is still on wheels. So why would I short that? There are easier stories to short because this has a real upside potential story. I can't measure the benefit. Is it from 24 to 42, all of it? I can't tell you that because I'm really not an expert at it, and I don't think anybody can. Those who have traded financials their entire lives, they tell you it's nowhere near their optimal levels, but a lot has changed since then. So maybe their optimal level is between here and what the other guys promise, and I wouldn't shoot for anything higher than that. So in other words, there are easier stocks to short. Technically, they look extended like that, but they have a story supporting them. And we saw that Trump also sent out less regulation or commitment to fewer regulations. So he is delivering on that promise. And the rates are higher and going to go higher. So the story has legs, is what I'm saying. So careful shorting. And the way to play it long is via a cheap debit call spread, and then the argument comes out to where and what time. Okay, so Joel and I have had this conversation a few times. If I have a thesis and I want to play it out and put money on it, I'd give myself time if I'm buying. So if I'm buying upside potential, which is a debit call spread, I buy a call and I sell a call higher, I spend half the width of the spread if I do it near the money, and it costs the same whether it's tomorrow expiration or 2 months from now. So why not give myself 2 months from now? So if I'm doing it now, I'll probably choose February or March contracts to buy a debit call spread and sit on it. And then if you change your mind, you can sell it back for a partial gain or partial loss. But if it hits and they rally through like it did for Priceline, for example, I just mentioned it, then you have the chance to double your money or close to it.
Nick, do you have any cybersecurity stocks that are on your radar here? Trump is signing the EO today. Any cybersecurity stocks on your radar?
I don't think so. I thought I shorted one. I can't remember the ticker now. But no, I don't, because they're headline stocks, and I'm just afraid that one day we'll wake up to a headline to where they've had a breach on their watch, and it could be a stock-specific thing, right? And the whole industry will fall, and that stock will get killed. So since if I sell spreads, I don't want that on my book sheet.
All right, we've been on the line with Nick Shaheen. He's the author of Create Income with Option Spreads, giving us a technical and a fundamental look at the markets. Nick, thanks a lot for coming on. We'll speak to you again soon.
Thank you. Looking forward to it.
All right,
Thanks, Nick.
851 here, Dennis. S&P's just hanging out here, down 5 1/4. Can't really take out the pre-market low. Anything change as far as imbalance?
We're holding up well in the S&Ps overall here, and it makes you think there's going to be some sectors that are going to pick up the slack because we're only down, 0.15%. But I'm looking at retail getting slaughtered because of Under Armour. I'm looking at the financials fairly weak here, although they are starting to come off their lows here now. When we talked about them 20 minutes ago, they were much lower. They're starting to come up here. So you start looking, okay, well, what's going to pick up the slack? Gold's trading significantly higher here, but such a small portion of the S&P. I don't see a lot in the green here this morning, but there's going to be some stocks that pick it up if the S&Ps actually start to trade here, because the retail is going to put a pretty good ding on it. You got stocks like UPS, and some other earnings stocks that are getting hit pretty hard here this morning. So surprisingly, S&Ps are holding on.
If you have any other issues that you
Joel has nothing to say.
Did you hear Spencer going, you're on mute. If there's any other...
Joel's on mute again. The old mute trick.
Yeah. Any other issues that you want us to cover?
Well, Dennis, I actually wanted to throw this in front of you. This is a tweet. This came across my Twitter a few minutes ago. This is from a Treasury Department source. The Trump administration is looking at the uptick rule again. So,
is he going to start messing with market structure? Because if Trump starts messing with market structure, holy cow! And I want to say something here. We got Jim Cramer. Has publicly said we need the uptick rule. We need the uptick rule. The uptick rule was the most horrible rule ever. It was just stupid. Honestly, I'm talking as a trader here. It creates so many inefficiencies. They already have, hey, Trump, newsflash, they already have an alternative uptick rule. When a stock falls by 10%, you can't hit the bid to get short for 2 consecutive days, which is horrible as well. It creates inefficiencies is what it does. Like, people think, this uptick saves the market. And a lot of people even blame the uptick rule, because we took it out before the financial crisis. Some people blame the financial crisis on the uptick rule, which is absolutely ridiculous. Why shouldn't you have, on the opposite side, if you're buying stocks, shouldn't you have a downtick rule where you got to buy them on downticks, Stocks will go where they want to go. The tick doesn't really matter. All it does is create short-term inefficiencies. Like for example, when a stock comes out with bad news, this is the short-term inefficiencies I'm talking about. When a stock comes out with bad news and there's no natural seller, the stock will just sit there because it can't, nobody can short it. So what happens is if you have people that don't know the news and they actually buy it, they're buying it at too high of a price because the stock hasn't went to where it wants to go. You see this happen all the time. I've actually even written pieces on it before where sometimes it'll take 3-4 minutes for a stock to go down to where it wants to go, especially some of the small cap stocks because they're not as well known. So what happens is, when you have an uptick rule is that you've got a bid. Let's say stock is at $25. Everybody will get on the offer at the uptick rule 25.01. So you'll see the offer just build because nobody's a natural to be able to hit the 25. So the offer builds. Well, if a buyer comes in at that time, they're buying it at 25.01. They're buying the stock at too high of a price. It's not correctly priced for where it wants to be. So all it does is create short-term inefficiencies. That's what the uptick rule does. It does nothing, it doesn't save the market from financial crisis. It doesn't save the market from bear raids. That stuff can happen anyways. So an uptick rule is just going to slow that process, but it doesn't even slow the process. It just creates inefficiencies. I absolutely hated the uptick rule all the years. And the whole other thing, there's ways to get around the uptick rules too. There's conversions, there's different things. There was ways back in the day. The uptick rule was just a waste of time. It was a dumb rule put in after, I don't even know when they put it in. I think it was back in after the Depression or something. So it wasn't for a lot of years. But it was one of the best things they ever did was to get rid of it. If they just come and randomly reinstate the uptick rule, all it does is create inefficiencies, and the little guy gets hurt because they end up buying stocks at too high of prices when the stock can't correctly price to where it wants to be.
All right, Dennis, take a towel there and calm down after that one. I knew Spencer.
Jimmy A put it right in the chat. He says it messes with price discovery. That's exactly what it does. People who don't understand market structure, are cheering for the uptick rule. People, who don't understand how the markets work. It slows down the price discovery process, and stocks can actually trade at prices that they don't want to trade at. That is what the uptick rule does.
All right, real quickly here, Nike, the most closely correlated here with the Under Armour. That's why that's getting the beats. 54, that posed as major resistance. Now you break it down to 52. Don't see much between 51 and 52. Couple a gap there to fill down to the 51 area. After that, $50 looks like some decent support. But Nick never goes away here. And Dennis, we got to talk about Disney here real quick. Even though your movie was only nominated for 2 Academy Awards here.
Very nice movie. Very nice run.
Very nice run here. And look at Dennis. Now we've cleared 110. I mean,
took out that seller at 110. That's what we talk about. Now we got to look for the seller at 112 because we took out 111.05, so we took out the book at 111. So now you think 112. Probably more paper at 112. But yeah, we took out that seller at 110. That's what held it down for the last few weeks here where, it's a breakout for Disney. But am I coming in here? I don't know if I'm coming here. This is the kind of market to be buying breakouts in. That's my only concern. The stock chart itself looks good. I'm just not sure we're in this market where people are coming in buying breakouts.
Right. Okay. All right. Disney. You can see on Nick's chart here, he had that 110 level penciled in, had a lot of highs there. You cleared out the sellers, got a little trend line coming off the all-time highs, so that we'll see if that comes into play today. Dennis?
One more, though. The Under Armour conference call was at 8:30, so Kevin Plank's been talking for the past 10, 15 minutes or so, and he didn't say anything that I saw that was super interesting. Obviously, I can't listen to the call, but I didn't see anything that came out as being super interesting. Is Under Armour moving at all, or
it's trading lower again?
Okay.
It's down 24% now.
Yeah, I mean, it had the bump. I mean, it got overdone at that 2048. For this, just keep an eye on your pre-market highs and lows. All right, it is 8:58. Spencer, you want to wrap up?
Well, we're going a little longer. We have a call at 9 o'clock. We're going to talk with Nikhil Dhingra. He's the co-founder and CEO of a company called Tradagon. If you like new approaches to the market, I think you're going to like this guy and his company. They kind of created a new way of looking at the market. They call it behavioral calculus, and it hones in on the feedback loops and looking at short-term and long-term trading and going short and long on the equity side. So we're going to talk with Nikhil in just a minute or so. And before we do that, though, I just want to mention that today's show is brought to you by Chaikin Analytics with their award. With their groundbreaking stock research tools, including the proven Chaikin Power Gauge rating and stock discovery engine, Chaikin Analytics simplifies complex investment decisions, and it's all presented in an easy-to-understand platform. To learn more, visit ChaikinAnalytics.com/premarket. That's Chaikin, CHAIKIN, analytics.com/pre-market. All right, we're going to take our final break of the day, and we're going to go ahead and grab Nikhil Dhingra. He's the co-founder and CEO of Tradigon. We'll be right back. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elkanan, and we're on the line with Nikhil Dhingra. He is the co-founder and CEO of Tradigon. So, Nikhil, I want to ask you about what you call behavioral calculus. I'm very interested in when people take new approaches to the markets. Can you explain what exactly behavioral calculus is and how that relates to the market?
Yeah, so behavioral calculus is really a concept we invented based on a thesis we had a few years ago, which is that all market movements are really a function of how crowds behave and sort of this herd mentality that we're seeing in not only the markets but daily activities in general. And so then we started looking into how can we model this, and we found out that it really is tapping into some fundamental calculus, theories that our CTO is pretty deep knowledge in. And it's a common objection is that you can't predict things like price action because they're very complex change phenomena. We found a way to analyze behavioral time series data, and so that's where behavioral calculus comes in. So we're combining calculus approaches with a new time series analysis that has a behavioral component, and so that's where the word behavioral calculus comes in.
Okay, so now let's bring that back to the markets here. So how does that relate short-term movement and long-term movement?
Right. So again, part of our thesis is that crowd behavior piece really applies to short-term price action. So you'll see longer-term trends obviously are affected by fundamentals and things like company health, earnings per share. But we believe that short-term price action, so how prices will behave today, tomorrow, next week, even for the next month perhaps, are really embedded in the price action and what that represents in terms of how crowds will react to trends. And so that's what we do. We basically invest in short-term positions, 2 to 3 month out options, let's say, at or out of the money a bit. And that's when we see our, thesis proving out within about a week.
So what exactly are Tradigon's products then? How can people interact with the company?
Yeah, so we are primarily a B2B play. We have a proprietary trading technology built on behavioral calculus. So for this year, we launched about a few months ago, and so we have a minimum viable trading product is what I call it. And our next move is now to really get into the B2B space and find some institutions that have a lot of trading activity going on. Let's take some of the top hedge funds or banking that still do some prop trading and really have them pilot our technology internally. And again, since this is pretty proprietary, we're looking for the right strategic partner that has the same vision as we do and really believe that fundamentals affect the market longer term, but they're pretty quant heavy. So we're going to look at them and see if we can pilot this internally. And then longer term on our roadmap is really packaging up some of this core BCalc technology into indicators that can help the retail investor. So we're not really, unwrapping everything at once for everybody, but we're kind of taking this in a phased out approach and seeing, okay, let's apply this at scale with greater assets under management, with more computing power, and then let's find a way to really expose this to the average consumer to help them on a day-to-day basis. In terms of our products, we have a flagship fund which we've had operating for a few years, in that we're trading our own money, our own capital, so we have a lot of skin in the game. And two is really packing up some indicators for the retail investor. And then finally is an API that we can expose some of our BCalc data and BCalc indicators for whoever wants to consume it in a secure manner.
Okay, now talk to me about do you have an idea of what those indicators could possibly look like? Because I see the word behavioral calculus and I get totally flustered. What kind of knowledge base do you need to be able to digest this information, and what would your indicators then look like?
Mm-hmm. Yeah, so one way to think of behavioral calculus, and again, let's call it version 1 of behavioral calculus, is really a hybrid of technical analysis on steroids, let's call it. So we have multiple inputs that go into our BCalc engine, and that's obviously real-time price data is a big thing we look at. So we're predicting price action with prices as an input, but we also can take multiple inputs of different structured and unstructured data. So we can look at other fundamental business data, take economic reports and CPI as an input. And so you can overlay those different inputs and say, well, this company's earnings in the past have been trending up or down. So we would like to put that through the engine, and it'll issue buy or sell signals based on those inputs and come out with sort of an aggregate buy or sell that you should or exit or hold, whatever it might be, and you basically take that action.
That makes sense. That was explained surprisingly simply. So now are you guys going? It's long and short, correct? You guys are on both sides.
Long and short. Yep.
Okay, cool. And then can you speak a little bit about what exactly you guys are trading right now, or do you have any specific ideas you can potentially share with our audience?
Sure, yeah. So I don't like to get too deep into our positions, but we are active traders. We really have skin in the game, and obviously right now, especially this week, I think everybody's a little bit on edge with some of the uncertainty. But as of last week, we had some good sort of instincts on the market, and we said, well, we're sort of bullish on the tech sector. I know this is a big week for earnings, but we are bullish sort of in the next couple months that tech is doing pretty well, and so right now we're kind of invested in sort of the ETFs around tech. Same with sort of the broader market, minus biotechs, minus transportation. So materials is doing pretty well. So we're kind of exposed broadly in some of the ETFs because we're getting a lot of signals that sort of in aggregate, you'll get a lot of tech stocks that are doing well. So we'll just expose ourselves to the ETF, which is good because it minimizes risk a bit. But again, there is that uncertainty going on right now. So we have a little bit of sort of risk management in place as well.
Just real quickly, walk us through for a retail investor, let's say that's looking at a stock like Under Armour today, getting killed in the pre-market. Can you do any short-term analytics like that, or do you guys need something over a longer-term perspective?
Yeah, we can tell you, so earnings, I guess, came out this morning for Under Armour, and we don't like to do too much activity around earnings because again, those are short-term sort of uncertainty blockers where we'll say we're not going to invest in this until after the earnings, because really, I think everybody might agree they really can go either way. Oftentimes, BCalc will have, let's say, buy-sell trends before earnings. So, sometimes if we feel like taking on the risk, we'll bet. And they will work, but we try not to do that. But I can say for Under Armour, I mean, it's been in a pretty bad trend the past, since October. And so in late October, BCalc issued right after those earnings. I think it went down, but after that, BCalc issued like a big short signal. So since then, somebody could have looked at BCalc and said, okay, the longer term chart is showing pretty big downward trend. Let's just short it right now, and you would still be holding based on BCalc through these earnings. And today you could have unloaded those.
Last question. When you say you're looking at tech, for example, what exactly does your research consist of? Or you're looking at your own proprietary stuff, but are there other things that you're looking at as well?
Can you specify a little bit in terms of data?
Yeah, I guess what kind of data are you guys looking at is my question.
Yeah, so the really exciting thing about this is that it's extensible. So we can run a lot of different data sets through the BCalc model, as long as it has some sort of time series component. So we're looking at actually cross-domain data a lot of the time. This is a little bit futuristic for us, but this is kind of what we're working on now, is taking in different types of data, let's say from the sphere of epidemiology, right? So you can look at how a disease, might spread. And because that's a time series data set, we can get the same level of predictive power in the model. So I'm not saying that's an input into how to predict the market, but it just speaks to sort of the broad applicability and universal nature of this. In terms, again, of our specific market predictions and what data we're taking for that, it's price data right now. It's fundamental business data like CPI reports, unemployment reports. So, we say fundamentals don't affect the longer term exclusively, but we'll take those as an input to help supplement, our traditional quantitative analysis, which is using price action. But we do believe that price, again, is the most important factor in predicting price, and that's where the calculus element comes in.
All right, we've been on the line with Nikhil Dhingra. He is the co-founder and CEO of Tradagon. That's TRADAGON. Using behavioral calculus to attack the markets. Nikhil, thank you so much for joining us this morning, and we will talk to you again soon. And we'll see you at the FinTech Awards, hopefully.
Sounds great. Thanks so much, Spencer.
All right,
appreciate it.
All right. That was Nikhil Dhingra of Tradagon. So that's it for us today. Hope you enjoyed today's show. We'll be back with you folks tomorrow for the man himself, Gene Munster, no longer of Piper Jaffray, now of the Loop Ventures. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Have a good day, everyone, and we'll be back with you folks on a Wednesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.